Trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, this is the cash S&P, also known as the ETF for the S&P 500. You'll notice here on Friday, yesterday, we had a big sell-off. The Dow dropped 400 points from the high and stopped right here, which was a pretty substantial spot to stop at. It was right at the 382 retracement, I believe. I wanted to get this up here, and there it was. You'll see that was stopped right at the 382, and that's. I sent the video out last night, and I said, look for the market to rally one more day. That's the 5th, 6th, and 7th, the 3-day rally. There's your 382 on the cash. Okay, that number in the futures came in at 35. I think it was 35. Was it 55? 55. I can't even remember the numbers. Here, it was 50. Excuse me. It was 55. Hold on a second. Well, let's switch over. Here it is right here. There it is. It was 53.60 was the number. That was the 382 on the whole thing. Now, let me get the daily up here so you'll be able to see it a little clearer. But there was the 382 retracement right here. Okay. Now, this is actually a 3-day move here because of the difference. Well, I think I'm missing data. Hold on just a second. That I think that's impossible. Yeah, well, there it is. Okay, there was the move down. I had an outage this morning for an hour and a half, which is normal. Okay, here's the high that we made today. All I'm going to do now, and I did this in the video ahead of time, says if this is correct, we're going to get a 3-day rally that's going to stop exactly at the 382. So if you go down to this level up here, up to the high, there's your level right there. You can see it right there. It comes in at 50. The high was 59. It went above it. Now it's 70 handles below it already. This is where we're going to be. This is my 2 cents worth. This is where we're going to be here in just a few days, probably out here about another 5 or 6 days, maybe a lot less, maybe in one day, maybe never. But there's your ABCD pattern taking us down to 4770 in the S&P. That is down another 5,000 points. So keep that in mind. Now we're going to look at some of these others just to show you that we were looking at everything. Now here is the Dow Jones contract. Now we're just going to get this up here. Now what I did was I double checked this 3 different ways. You notice that we had a potential ABCD pattern forming right up here. Okay, so all I did now is I went to the daily chart. I think I went to 4 hour. Let's check. Yeah, there's your 4 hour. There's your 382 off of the high that we made back here. Remember, the high was here on July the 18th. We had a secondary high right here. So the secondary high on this comes up. It took out the previous day's high by 20 pips and had order setting in there, and it didn't get filled. Now you can see where we are right now. But last night, you see, after that big move, we came all the way down and stopped right here. Here's my 2 cents worth. And I sent this out in the video because we've just about pretty much say you complete this because you did it and everything else. I'll do the NASDAQ one at a time here. That tells us that we're going to take this out, and that means we're heading down a whole lot lower. Now let's move over here to the NASDAQ. I think I can get it here somewhere. Oh, boy. All right, just give me a second. I've got to just give me 1 second to get this set up correctly. And I can pull it up so we can get everything looking at it. Where I took it off the board because I wasn't looking at it that close. So I'm going to bring it up here now because I did all 3 of them, folks, to show you what was happening with these things because they were all doing exactly the same things when I sent this out at 7 o'clock last night. So here's the NASDAQ. We're going to get up here, and there's the NASDAQ. And this is where we were yesterday, as you can see here. And what I suggested was that we were going to see a ABCD patterns completing up here at 1839.65. Now we are now 518. There were 300 handles down from that level, getting ready to take out. We just took out yesterday's low just now. Now, why is this important, folks? Because if you look at the long-term daily on this, okay, you look at the long-term daily and move this over just a little bit. Remember, there was our ABCD pattern that we were looking for. We got it. Look at this. 1, 2, 3, and boom. What do we have here? 1, 2, 3, and guess what? Boom. Boom is coming, boys and girls. Hold on. Like rise and shine, little buckaroos. I've got places to go and things to do. Hold on here a second right here. And the 382 on this came in here at 686.97. We missed it by 100 pips so far. But as you can see, taking out yesterday's, we haven't quite taken out yesterday's low yet, but we're not very far away. Well, pretty close. Anyway, it looks to me like we're just beginning to start this down move, folks. This was a little taste of what I think is to come. And, like I said yesterday, don't expect more than a 3-day rally on this because it's got a lot of problems technically. I don't know the fundamentals. You can do whatever you want to with the fundamentals. So we covered that. We need to cover the Russell. Hold on a second. I had all these lined up, and when the data went out, okay, here's the Russell. You can see there was the same thing in the Russell. There's your 382 in the Russell right here on the whole move, folks. The 382 measured to 21.16. The high was 21.13. We're now 70 handles below, taking out the lows of almost taking out the lows of yesterday as we speak. And there is the larger A, B, C, D pattern coming into 21.15. The high today, this was 21.14. The high today was 21.12. So if you had your order in there and you didn't get filled, well, you can blame it on the old cowboy. Sometimes I dance around these markets a little too much, but anyway, that's what this looks very negative now, folks. So let's do that. So we've covered the Russell, we covered the NASDAQ, we covered the S&P, we covered the cash, and we covered everything. So we covered all of those indices, telling us that it looks like we are heading down. Okay, now let's talk. We've already talked about the bonds. All right, let's move over to something that we know a little bit about, and that is the silver and gold market. Here's the gold market. I want to get this up here. Had a really beautiful pattern here again today. It's going to blow it up. This is the hourly chart. Now remember, when we're trading the gold on a smaller time frame, we move down to usually a 13-minute chart because we can trade that without risking an arm and a leg. And there was your sell pattern today. There's a perfect A, B, C, D pattern. I'm going to be doing these live, folks, on Friday, tomorrow. And again, on the second Friday of the month, which will be on 9th and the 23rd is when I'll be doing these. So tomorrow, on Friday, this is Thursday. So you have 5 days in a week, not 2. Okay, so here's what's happened so far. We had a nice move down, certainly made the first profit objective. And now you can see we're just fooling around here. This is when I missed data here, folks. Let me refresh this, and you'll see where we are. They're corrected the data. Now, just on a really small time frame, you can see the 1, 3, 5 pattern that we look at. There's 1, 3, and 5. If you look at the last rally back, looks like it went to about 50%, and there it is, and still heading down. Anyway, let's take a little break here. We got Jeff Hughes coming up at the break, but we got a few more things to cover. So live every day in an attitude of gratitude, and may God bless.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, so yesterday we were showing you the bean oil making that 1.618 expansion of this whole move, and it stopped right here. And then, of course, it had a nice rally. I just wanted to point out to you, when you see something like this, prepare yourself for a pullback. And here's what I wanted to show you here is today's action. Okay, now, there was the low that we made right here, but look at this, folks. There was your ABCD pullback right here. You see this low right there? And you see that low right there? That's a head and shoulders, folks. Left shoulder, head, right shoulder, right there. And where did it go today? We're just going to show you. There's AB equals CD, and went right up to that level right here. And it's already backed off a little bit. I had an interesting conversation a couple days ago. Someone from back east wanted to become a student, and he asked to see what I did. I said, well, I'll send you a few videos out of what I do if you have an interest in. And then he called me back. He said, I don't need to learn anything from you. He said, ABCD's been around forever. Everybody has that. He said, that stuff doesn't work. I said, yeah, you're right. Sometimes it doesn't. And that was the end of the story. So I hope he does well. And I'm sure he will. Anyway, that's what we have going on now. Let's go back and play the devil's advocate here in the bean oil, folks, because we're going to have a trading day tomorrow. If by any stretch of the imagination that we get something like this tomorrow in the soybean oil, and we could, because it's only down 40 points from where we are right now, if we could get something like that right here, there's the old high, okay, there's the pullback right here. It's going to be a very low-risk trade for soybean oil because you've had a really beautiful ABCD. There's the pullback at the old highs. Yeah, I know it's old hat. And, everybody has it, but they haven't seen the secret stuff, folks, because when I put the secret chart coming up next, just get ready. 1, 2, 3. And there's what I use, folks. The exponential moving average, 13-day move forward by 1.25 a day. And anyway, that's what we're looking at. I have to tell you the story behind this because I was sitting here one day with Mark Douglas with one of his students, and I was screwing around with the program here with Ensign, and I hit one of those buttons that gives you all this beautiful colored stuff and all this stuff. And the guy saw my screen flash up, and it was all colorful and everything. And he said, "Wow!" He said, "What is that?" And Mark said, "That's Larry's $25,000 private system." And the guy said, "I'll take it." Should have sold it to him. Anyway, that's nothing more. I'll just show you what it is. You'll be able to see it right there. It's nothing more than a 3-13, 34 periods, a 13-day, 3-day moving average crossed. Is that all? I don't use it at all. I just happened to hit the M button to show you, I do have funny stuff on here. And I'll tell you, the guys are really good. Steve Rhodes and Basil Chapman are very good because moving averages act like trend lines. So you see, if you break those trend lines, that gives you a pretty good idea. See, here's your trend line coming down here from this level like this, okay? There's your trend line right here. Your moving average, by the time you get the buy signal, this thing's going to be way up in here. So that's why these things lead the market. That's what you want to do. You don't want something that's lagging. You want something that's leading the market, okay? All right, let's move on. We want to talk about copper. Someone's asked a question about copper. And then, of course, we'll get to Apple and we'll get to Tesla. Hold on here. Copper starts with a HG. Here it is, H copper. Remember, we're looking for the low to come in down here. Oh, we're getting real close. Let's get on to the daily because that's where the big number was, down there at 88, I believe. We're almost there. No, 77. There it is. And you can see here we've broken down. There's missing data. Hold on. That's data being out today. Hold on a second here. There it is now. You see we've got to go 77. Another 18 cents lower. Should have a pretty good low here in copper. So let's remind ourselves that that's something that we have to watch, okay? Now we'll get to the Apple. Mr. Appel, who's down by the well. Hold on just a second here. I have a great Byron Tucker story. I can't tell it today because there's not too much time left, but maybe I will. Hold on one second. Hold on. It makes me laugh because I brought a lot of memories with that. Hold on. Here's Apple. Okay. Now we were higher a little bit earlier. There's not too bad. What did Apple do? There's your 60% retracement right off the top. So did exactly what you wanted to see it do. And that's been a pretty good rally here in copper. 3 days. There's 1, 2, 3 day rally stopping. There's your exact 618, folks. Within $1, not even $1, within 50 cents. Oh my God, it hit it 12 cents. The number was 213.72. The high of the day was 213.59. That's 60 cents on a big stock like this. Anyway, that's what we're paying. Now we have to look at Tesla for everybody. Hold on a second. And Tesla, I think a Tesla, where are we at here? Tesla. And here's Tesla, still rolling over. Got more to go to the downside here. See, couldn't even make any rally here, and it's starting to back off a little bit also. And we had one other one to look at. I haven't seen this one for a long time, but this is United Healthcare, and this is one of the bigger ones in the Dow. And as you can see here, that was part of the reason for this giant run-up that we had. Okay, there's the August high. Okay, August 5th is when it made its high. Remember, the stock market topped on July 17th. This didn't top until then. See there, because this is a Dow stock. See, so that's why the Dow went higher, because of all of the ABCD patterns that were in there. And then it was yesterday, we did have a little bit of a sell-off, and we stopped right at the 61% or 50% retracement. Now we're starting to move down. Folks, look what this stock has done. You see, if this thing starts to give up because it's a 500, this one and I at Goldman Sachs are your two most expensive, but this is the most expensive of all. And if this one starts to give up, then look out. Then you're going to see some movement in some of these things that will be a little scary, the bejeebies right off of you. And that's something where you don't want to be. We had one other one that people wanted to know. What was UPS. Hold on a second here. UPS is right. This stock is in trouble. I mean, this literally, it's there. That's just on a 60-minute chart. Let's look at the daily. You'll see that it's got very few friends, and you can see the big gap down that we have. Here's another example, folks. Let's get this up here. Of a real bearish market. What do? Usually you get 3 days. This gave you 1, 2, 3, 4, 5 days. You had a rally, but I don't believe it came anywhere near. No, it didn't come anywhere near a 382 retracement, making it, whoa, didn't miss it by far. It took out the previous day's high by a little bit, but missed it by $1. And look where we are now. We're already getting ready to make new lows from yesterday already. Not a very good sign. So you got to remember, folks, when the only way is up, the only way is down. So remind ourselves, just be careful. It's not how much money you make, it's how much money you don't lose. And that therein lies the real secret to trying to do the right thing when you're doing the trading. Okay, now I'll get rid of some of these, and we're going to have Jeff Huge come up for our break. And then when we do that, we will have a lot of fun. Always has some great material, and he'll be a lot of fun to listen to as we move on to some of these things here that we're paying close attention to. Okay? Hope you can join us tomorrow for our live trading session, folks. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, and we have a caller on the line. Jeff, what can I do for you, my friend?
Hey, Larry, this is Jim. Real quick question.
Oh, sure.
Mike Moore comes on. I don't know if you've got Jeff on the other line yet.
No, go ahead. Please continue.
Number one, if you could ask Mike why there's 80-cent spread between regular unleaded gas and premium, I'm always curious what the fundamental reason is for that. But number two, I'm trying to redraw my fibs now on this NQ chart.
Yes.
I was lucky enough to pull 150 points, covered it. Now we're playing right with this 220 again.
Mm-hmm.
So it looks like we went to the 382, almost like.
Well, we missed it by a little bit. But I will have Mike on tomorrow, and we will answer those questions. Call in tomorrow and ask again, because he'd like to have a caller to call in also.
Oh, no problem. Are you still short? Have you covered on your meaning on this little bounce back and on the NQ, or you just let it ride?
I'll cover it sometime in October.
Gotcha. Thank you.
Okay, that's a joke. All right, we've got Jeff Hughes on the line. Jeff, thank you. Thank you for hanging in here this morning, buddy. And you want to talk today with the yen carry me out the door trade? Is that what you'd like to say?
Well, Larry, hey, first of all, thanks for having me on the show today. And I did want to try and add some additional color to the yen carry trade. It's been something that's been discussed on financial media for about the last 48 hours nonstop. Suddenly all the journalists in the world were made aware of it. Now they're the foremost experts on the subject. But, the long and the short of the yen carry trade, it's been around for 30 years as, the Bank of Japan took interest rates down to 0% back in 1993 or so. And, they've been there ever since, a zero interest rate policy. And, they lifted them 10 basis points back in March, and then another 25 basis points off the zero mark. And so, now we're at this, very low level of 25 basis points for a policy rate. The U.S., when we were at zero, it was really 0 to 25. So it's still functionally zero in Japan. So this unwinding of the yen carry trade has barely even begun at this point. Nobody knows exactly how big it is, but if you think about how long it's been put on and how much leverage there could be, I think it could be measured in trillions of dollars. Certainly, tens, if not hundreds of trillions of yen, right? Yeah. But, the mechanics of it are pretty simple. You short the yen and you take the money and then you go buy a higher yielding asset. But a lot of people don't just buy, U.S. T-bills. They'll go out and buy NASDAQ futures. And so what we saw with the big backup in the yen over the last couple of days is just these guys that had the most aggressive positions on. But I would argue at this point that there's trillions of dollars of leverage in this trade that have yet to come out. And I think it's just the very, very tippy top of the iceberg that we're seeing at this point.
I agree with you 100%. And that is the most misunderstood trade that I've ever seen, because I've had to have several people sit down and walk me through it. But, the big professionals have been using it, and boy, when they're wrong and they try to go to the door at the same time, boy, be careful, because that door can close really quickly, as we know.
Yeah, and to your point, the big guys have been using it, right? But they're not using it with their own money. They're using it with other people's money. They are incented to maximize returns so that they get 20% paid carried interest. And so what they're going to do is they're going to lever up the trade to the maximum possible. And these guys are very, very clever guys, and they've been out there trying to find how can we borrow the most amount of money at the least amount of cost. And this trade has been the way to do it. And, if we take a look at what the Bank of Japan is talking about today, we had Yoshida come out. He's only the deputy governor of the Bank of Japan. We didn't have Ueda come out. He's the governor. He sent his first deputy out to say, okay, Uncle, we're done. We're not going to raise anymore. We're where we want to be. But take a look at this chart. This chart shows you where core CPI is in Japan at 2.6%. Their policy rate's 2%, and they're at 25 bips on their policy rate. They have no choice. Looking out the next, 12, 24, 36 months, those two levels need to converge. Otherwise, they're going to have runaway inflation the same way they had runaway deflation back in the 90s.
Wow. Yeah, that's really something. Hold on a second here. And I want to congratulate you, being from Minnesota, that you're going to have the vice president being representative. So I'm sure you know him personally. This is the Japanese yen. This is showing the currency itself of what's been happening. And of course, we've had a pretty big move, but like you say, this is just starting, for heaven's sakes. This could really be
14.3%, Larry. If you look back to late 2022 off the October lows, it was up 19.8%, but you can see a pretty well-defined trend line there. That trend line has been broken to the upside, and I think it's just a matter of time before the yen rallies up into the 0.85 level. I mean, I'm showing the chart on an inverted basis. It's normally quoted U.S. dollars JPY, right? But it's tough to kind of envision the yen going up when you do it. So I've inverted it, and I show the JPY first in this cross. But, from a Japanese perspective, I think there's a lot of room, maybe somewhere in the neighborhood of 20 to 25% upside from here in the yen. And I think it could happen rather quickly. So we'll have to see how that plays out. But as it creeps higher, that's going to put more and more pressure on that yen carry trade. And that will be the catalyst for this thing to unwind in epic proportions.
Yeah, I have to agree with you. But when you see you can see what happened back in 2015. It went up for a whole year.
Yeah.
So and this is from a much different level. So that in itself is something pretty exciting. Hold on, I think we've got to take a little break here. Margin. We've got to talk about margin. Let me see what time we've got here. We've got a minute. Go ahead and start with margin debt here, because this is one of my favorites. I think this is where the big problem lies.
Yeah, margin debt's near its all-time record high. In fact, this is the June number. They reported 30 days in arrears, so it's reported with a delay. We had $810 billion in margin debt on June 23rd. Recall that NVIDIA topped on June 20th, so it wouldn't surprise me if the leverage in the system peaked in June. But we still have July's data to come out. It wouldn't surprise me either to see it even higher. But the real issue here is investors' net credit balances. We're at negative $500 billion. That's if you take margin debt and cash together. And we've only been higher than that once, and that was back in 2022 at the peak.
Well, Jeff, stay with us, buddy. We'll be right back with Jeff Hughes of Alpha Insights. Great information, folks. Pay attention.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, speaking with Jeff Hughes of Alpha Insights. We're talking about the volatility index chart, and I guess you would call that a spike, wouldn't you, Jeff?
Yeah, I would definitely call that a spike, Larry. And in fact, I put the wrong chart in. I meant to put a 5-year chart in, not a 3-year chart. But, I'm going to extrapolate a little bit on this by first saying that, the point here is that there's so much leverage in the system, right? And some of that leverage is put in through margin debt. Other is through the yen carry trade. But one of the main ways that we've levered up is through the use of options, and mostly short-dated options. And if we were looking at a 5-year chart, we'd be able to see what went on back in 2020 during the COVID crash. And the initial leg up stopped out at about 40% and then retraced dramatically back down to around 30% before blasting off again to its next top, which was about 55%. And then it retrenched some, and then it rallied up to 75%, then retrenched all the way back to 60% before it rallied all the way up to about 88%. So I think what we just saw was the first leg up. And this pullback here is people are reloading. Institutions are using this counter trend advance as an opportunity to sell. And you can see that by looking at yesterday's open and close, right? We opened up 50 handles on the S&P and closed up 25. Today we opened up 50 handles, and right now we're up about 13 so far. They're just selling into this rally with both hands, right? Because you sell when there's liquidity, okay? And there's no liquidity when the bottom's falling out. Now there's plenty of liquidity, and they're just casually selling in. My guess is the next spike in the VIX will probably be on Friday or Monday of next week. And this is going to go on for a number of weeks. So we are not going to see the bottom in this sell-off for some time. From my perspective, if you take a look at some of the biggest stocks, Larry, the main stocks that everybody owns, Apple, Microsoft, NVIDIA, Google, these are down 17, 18, 35% in the case of NVIDIA from peak to trough. Amazon down 25%. Tesla is still down about 33% from its recent recovery high. The NASDAQ's down about 15, 16% off of its high to its low. The RUT was down 13 and change. Actually, the RUT's negative today. And so, there is nothing but selling going on here. And the only thing that really made the index rally was NVIDIA's performance when it was up 150, 160% out of the gate this year. That carried the index and made it look like stocks were rallying, but the average stock is negative right now. The median stock is negative right now, and I think that we've put in a generational top for equities in the U.S.
I have to agree. Now, we're talking about investor sentiment here that pretty much goes right along with what you're talking about, doesn't it?
It does, and this is advisor sentiment. So this isn't just the average investor. This is taking a look at the guys that advise the average investor, people like me, right? And I'm one of the rare bearish advisors out there. Most advisors are uber bullish, but they got up to, net bullish sentiment among advisors got up to about 81% here in July. That's a little lower than the 83% that it put in the May time frame, or I think the April time frame rather. And the point is that we have a negative divergence as price went higher. This net bullish sentiment made a lower high, and that's not a good sign. That indicates that there is a break in the action. Like some advisors have reached the point of recognition that this is a real problem, and they're making changes. And people adjust their asset allocations based on what their advisors tell them to do. And what this is telling me now is that advisors are changing. They're making a change to allocations. And if you take a look at all these systematic traders out there, the CTAs and the hedge funds, these risk parity products and these vol-targeted products, that move in the VIX the other day was an absolute sea change. It changed the character of the market. And in my view, and we wrote in great detail about this in a recent newsletter, explaining exactly how it's happening and all the mechanics of it. But what we're seeing is this sea change, and it is just beginning. It's not over. People are saying, hey, buy this big spike in the VIX. No, you don't want to. You want to sell it.
Yeah. It's a beautiful chart there of NVIDIA. Boy, it's really had a heck of a break from 140 all the way down to 90 with bullish news almost all the time on the thing.
Yeah, the chart pattern itself predicted a measured move to 93, and it went through that. But the Elliott wave count predicts a much lower level. It predicts a level of 76 for the initial minor wave one down. And so, we've got a very, complicated count here at multiple degrees of trend. But what we just saw on Monday's low, we believe, is minute wave 3 down. And we've probably rallied back here in 3 waves to complete minute wave 4. And so we're beginning minute wave 5, and it could take, say upwards of a couple of weeks. And I say that because NVIDIA reports on the 28th. And so I would expect the stock to bottom sometime, ahead of that report. And then on, presumably phenomenal news, right? And some sort of a big surprise, the market should explode higher. That's, obviously speculative at this point, but that would be wave 2. And wave 2 is just wave 2 of 5. So we've got multiple waves down to follow. I don't think NVIDIA is out of the woods until it gets back down into the 30s, possibly the 20s.
Wow. Holy cow. Now we're talking a little bit here about the S&P 5391. I agree with that number up there. It looks like we're having a little bit of a 3-day bounce here after a big break.
Yeah, and that 5391, I'm calling that my make or break line because it's highlighted in that bright magenta. If we get through that, then probably we're going to go with the alternative count, and there's probably one more move to, an incremental modest new high. But if we do kind of go back and forth here for the next couple of days, perhaps the next couple of weeks, and finish that fourth wave kind of in a, sloppy lateral consolidation sort of form, and then a break to new lows, I think that if our preferred count's operative, and this is a 5-wave impulsive move to the downside, it should halt somewhere around the 50% retracement of the entire advance off the October lows. That would get us down to about 48.86. Now, the 200-day moving average comes into play right now at about 5,021. That's actually going up at about 4 points per day at its current rate of change. And so, in about 2 weeks, it's going to coincide with the 38.2% retracement. That's 5,071. That would be my secondary target. if it happens sooner rather than later, I think we get down to that 48.86 level to complete minor wave one. Then we should get a second wave bounce. That could be rather, violent. And then when the third wave kicks in at the end of the year, I think it'll be a washout.
Stay with us, folks. We've got another little segment here with Jeff Hughes of Alpha Insights, and we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
We're back with Jeff Hughes. He's going to tell us about his monthly newsletter. Please go ahead, my friend.
Yeah, absolutely, Larry. So we just published the most recent issue on August 3rd. That was Saturday. So everything that's in that is very, very hot off the press and very relevant to what's going on today. We entitled it "Winter is Coming," and in there we actually detail the Kondratiev wave. And people that are familiar with that will know that it's a very long-term 50-year cycle. We think we're heading into the Kondratiev winter, which is the final leg down, which is a multi-year. We think it could be a 10 to, say, 15-year process. We think that investors who don't know about this should read our newsletter. We cover this for free. You can basically get it for free by going to hugeinsights.substack.com. If you want to get the real details and the meat of the report, that's our detailed analysis and monthly positioning recommendations and things like that. You can pay a little bit more. It's like $15 a month to get an annual subscription. And we think there's a lot of value there. We give our investors a weekly update to our market thoughts and our top actionable trade idea every Wednesday. So, give it a look, hugeinsights.substack.com.
My friend, thank you very much. We'll have you on again soon. Keep up the great work, Jeff. You're a real star in this business, and I've seen a lot of things out there in the galaxy, and you're way up there with the best. So keep coming in with that good stuff. We really love to see it.
You're too kind, Larry. Thanks for having me on the show. Real pleasure.
Just tell it like it is, folks. Jeff Huge of Alpha Insights. His Substack is hugeinsights.substack.com. His website is www.jwhinvestment.com. So we'll see you folks on the flip side tomorrow. Live every day in an attitude of gratitude, and may God bless.